Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video we are looking at 5 quality businesses that you could potentially use to build your own portfolio. When you're starting a new portfolio, it's very difficult to basically find quality businesses out there. And what I will basically normally say to people is stay away from penny stocks and try to find high quality businesses that you understand. The key here is that you understand their business. If you don't understand their business and how they run their business, it can be very, very tricky because anything can happen. So start with what you already know and then build on that. If you are brand new and you don't know how to analyze stocks and whatever, then you might want to start with ETFs instead. ETFs are a basket of stocks, almost 200, 300 companies in one ticker, for example. So the risk will be way less buying an ETF than actually buying individual stocks. I'll give you an example here. 3M is one of the companies that I've had in my portfolio for a long time. At one point, it was over 4,600, but right now I'm down almost at 35%. The reason I'm down is not because basically the stocks, all the stocks are down in the last few weeks. It's because there's some legal situation going on. Okay, and right now I'm kind of stuck with it. Not sure what I'm going to do. Of course, I'm going to sell at some point, but right now I'm stuck with it. So it's very important to think about the bigger picture. But what I would like to give you today is 5 different companies that are quality businesses that have excellent free cash flow and so on that you could potentially look into. And I'm not saying these companies are free of risk. There's one in fact that is basically a little bit risky, but these are the type of businesses I would like to basically have started if I was starting completely from scratch right now. But as usual, before we do, it takes a lot of time and to research these stocks and bring it to you, record it, edit it, all of that stuff. So I would really appreciate if you can join us on the Patreon account and then join us on the Discord to meet brothers and sisters who are very much like-minded, who are sharing excellent basically ideas and things that they're doing in the stock market and so on. So that will be really helpful, and you get of course access to the dividend trackers and so on. Let's get started. Okay, the first company I would like you to pay attention to, again, I'm not giving you financial advice, I'm saying look into these companies, is Visa. Visa has a wide economic moat and is $470 billion market cap. Now this is one of those companies like you definitely have right now. If you look at your pocket, you'll probably see in your wallet, you probably will see a Visa card in there. So it's easy to understand what they do. They of course they're Sharia compliant. They are a technology company. They don't deal with they basically facilitate for the transactions. That's what they do. Currently it's trading $231 per share, EPS of $7.88, and 52-week low for this company was $174 per share. So it has gone up quite a bit in the last 52 weeks. Now dividend yield is 0.8, payout ratio only 22%. So that means they can increase this dividend if they would need to, and they are actually increasing massively because recently they've increased it by 20%, and the 5-year growth rate is 18%, which is absolutely huge. They've paid that dividend for 14 years in a row. Their annual payout is $1.80 and safety is 99%. Profit margin, we're looking at 51%, return on equity of 43%, and return on invested capital, we're looking at about 27%. In terms of revenue side of it, for the last compounded annual growth rate of 5 years is basically we're looking at about 10%, which is quite huge. Free cash flow right now, they have $18.66 billion of free cash. This is the money the company can use to pay back any debt, pay off any debt, buy back their own shares, acquire other businesses, pay you some dividends, grow the business as much as they want to, and so on. Right now, free cash flow per share is $9.20, which is absolutely huge. Total return in the last 10 years, we're looking about almost 18%. Next year, they're expecting the earnings to grow about 14%, and then almost 15% every year after that. So just based on this, basically what the estimates are saying right now, this is really good for this company. Now it's discounted right now about 5% according to Morningstar. Their price target is 241. Seeking Alpha is about 20% discounted, as they're saying, $277 per share. It is a buy right now. From Sharia compliance side of things, there is no problem, and they're buying back their own shares. Now the next company we're looking at, Procter & Gamble. This is another company that sells Head and Shoulders and a million other products, the household products that we buy. So they do have the beauty side of it, grooming side of it, healthcare, fabric and home care, baby, feminine, basically family care, all the feminine stuff, for example, the beauty segments. They have everything basically. Like whenever you go to the shops, you'll probably grab their products without even thinking about it. It has 343 billion market cap and it has a wide economic moat. Right now we're looking at the price of $145 per share, EPS of $5.90, and 52-week low for this company was 122. I wish I bought more at that time. Okay, I think my original price was around here, but in the 52-week low is $122 per share. Dividend yield just above 2.64%. Payout ratio 62%. This is a little bit high. I'm hoping they bring that down in the next few years. Latest increase was basically 3%. The 5-year growth rate of that dividend was actually 6%, and they have increased that dividend for 67 years in a row. This is a dividend king. Dividend kings are companies that have increased their dividend 50 years plus. This company has basically done this for 67 years, and I think they have been paying dividends, not increasing, paying over 100 years. So the annual payout right now is $3.76, 99%. The reason I've included this company here is because it's a very predictable business, and whether we are in a recession or not, this is the type of business that actually still does fine. Profit margin right now we're looking at about 17.5%. Return on equity about 32%, almost, or 31%. Return on invested capital 20%. Revenue growth we're looking at in the last 5 years, we're looking at about 4%. Free cash flow right now almost $14 billion. Free cash flow per share $9.69. Total return in the last 10 years almost at 9%. Next year they're expecting the earnings to grow about 8%, and then 8% almost after that every single year, which is absolutely huge for this business. Right now it's a little bit expensive. It's 7% premium, $136 per share is where they expect the price to be. As you know, seen it already, $145 is where it is right now. According to Seeking Alpha though, they're saying about 15% upside, $167 per share, and it's a buy. From Sharia compliance side of things, absolutely no issues, and they're buying back their own shares, which is again another reason why we should look at this company. Next one, J&J. J&J is basically going through some legal situations as well, but their situation could be way easier than what the 3M is going through. But again, every single one of these companies does have some sort of a risk, but this one already has one that's ongoing that I'm hopeful that they will sort it out soon. So now that out of the way, let's look at the research that I've done for you guys. 373 billion market cap. It has wide economic moat, and the price right now is $155 per share. By the way, this company sells all sorts of things from healthcare, from consumer, although they've now basically spin off the consumer sector. So basically the company has created another one that's called Kenvue right now. So that deals with all the consumer section of their business. As you can see, 373 billion market cap. It has wide economic moat, and the price you can see it here. In terms of dividends, almost 3% right now. The payout ratio we're looking at about 44%. Latest increase was 5%, and the 5-year growth rate is right now about 6%. Now, in terms of dividend streaks, we're looking at about 60 years. So another dividend king that has paid that dividend for 60 years in a row. Annual payout, we're looking at almost $5, and safety is 99% right now. So the price basically has come down quite a bit from the 52-week and just gone up a little bit, but it has come back quite a bit recently. So I'm looking at right now to add into this company again. Profit margin, we're looking at about 13%, return on equity of 17%, return on invested capital of almost 12%, and then the compounded annual growth rate in terms of revenue for the last 5 years, we're looking at about 5%, and then free cash flow right now $14.55 billion, free cash flow yield of $9.20, return and total return in the last 10 years, including dividends and prices and everything, 8%. Next year they're expecting the earnings to grow by almost 9%. Grow the next 5 years almost 6%, which is absolutely great for this business. Now, in terms of Morningstar, it's saying it's discounted right now 5%. fairly valued right now, but their fair value price is $164 per share, and as you can see right now is $155 per share. In Seeking Alpha is saying about 16% upside from where it is right now. About 180 is what they're expecting. It is a buy from them. Sharia compliance side of things, absolutely no issues, and they're buying back their own shares, which is absolutely beautiful to see. The next company is Waste Management, another business to get your head around easily. This company collects all the garbage and recycles it, and it has all the recycling kind of system going on. 62 billion market cap. It has wide economic moat, $153 per share. EPS right now is $5.57, and the 52-week low is $158 per share. This company has been on my radar for a while since I sold it. But it hasn't come back down again, but it looks like it's now coming back to the getting closer to the 52-week low, which is quite nice. The dividend yield is 1.82, payout ratio 48%, latest increase was 8%, and the 5-year growth rate is 9%. 19 years of increasing that dividend. 6 more years this company will become a dividend aristocrat, and the annual payout is $2.80, 74% safety according to Simply Safe Dividend. Profit margin 11%, return on equity 32%, return on invested capital about 11%, and the compounded annual growth rate of, in terms of revenue, we're looking about 6.5. Free cash flow $1.5 billion, free cash flow per share $4.42. Total return in the last 10 years, we're looking about 15%. Next year, they're expecting the earnings to grow about 12%, and then 8% after that for the following 5 years. Every single year, 8% or more. That's the expectation. That's an estimate. That's not guaranteed. So don't take that for, just basically know that this is just an estimation. It can go up or down, of course. Right now, it's about 2% premium. I'm waiting for this company to come back down again, at least below this 2%. Then I can start looking at it. Their price is right now $1,449 per share. It's getting there. So hopefully if it comes back down to this, it will be good. 16% upside from where it is right now according to Seeking Alpha, and the average price of $178 per share, and they saying it's a buy right now. Sharia compliance side of things, absolutely no issues. Here is my main concern. If this gets to about 25%, then I'll be worried in terms of interest bearing debt, but this should be fine. In terms of shares outstanding, they are buying back their own shares. Final company that I want to talk about is Home Depot. Again, another company whose business you can go basically get your head around. Basically, it's the home retailer company, home improvement products, all the stuff that you need for your garden, for your house, from professional, from normal people. So and based it basically in the United States. So they're not, as far as I'm concerned, they're not like in any other country, mainly in the US and in Canada. 292 billion market cap. It has wide economic moat, $192 per share right now. EPS about $16. 267 is the lowest it's been, so basically in the last 52 weeks. Dividend yield almost 3%, payout ratio just above 50%. Latest increase was 10%. The annual the 5-year growth rate is basically 16%, and they have increased that dividend for 14 years in a row. Now, in terms of payout, you get $8.36 for every share of this company that you own, and 87% safety right now. Now, in terms of profit margin, we're looking about 10%. Return on equity, really huge. I think they have some sort of a negative equity thing going on here, just like a couple of other companies out there, like basically in the consumer discretionary. Return on invested capital, we're looking about 33% right now, and basically compounded annual growth rate in terms of revenue side of things, we're looking at almost 10% in the last 5 years. Free cash flow $16 billion. Free cash flow per share right now $15.40. Total return in the last 10 years about 16%. Next year they're expecting the earnings to grow about 6%. Then after that it's basically about 1%. But like I said, this is an estimate. Anything can change. The home prices maybe basically go up again, or people start buying more houses or renovating their houses. This can easily change. So it all depends how the housing market is in the United States and so on. Right now, because of the interest rate being really high, not many people are actually purchasing houses and so on. For that reason, they might basically once they basically interest rate come down, this can easily change. So it's not going to be maybe the next 5 years, maybe a year or so, and then things might go back to normal. In terms of Morningstar valuation, they say it's about 11% premium. By the way, I'm not basically saying is this is certain, so I'm just giving you an idea of what might happen. Morningstar is saying is 11% premium right now, $263 per share is where they think the price should be. 19% upside according to Seeking Alpha, $347 per share. It is a buy according to them. These basically, again, the analysts, so you're just gonna have to basically make sure that you do your own research and so on. Right now, in terms of Sharia compliance side of things, absolutely no issues, and they are buying back their own shares. Absolutely amazing. I love the fact that for the last 10 years, they have basically bought a lot of their shares. The reason we love this is because these companies are buying their own shares. That means every share of this company that you own is now worth more. When they dilute it, this of course it becomes less and less and less value wise. So there you have it, 5 different companies I would definitely be looking at if I was starting a new portfolio. And top of that, absolutely make sure you're looking at ETFs. Okay, I've done another video that I will put the link here, so at least you have an idea of basically some of the ETFs to look at for the Sharia compliant. But those are the 5 companies that I would personally look at if I was starting new portfolio, inshallah. And again, there might be, you might work in the healthcare industry, you might know some other companies. Do whatever your competence is, basically just do that. Find companies that you know well and so on. If you haven't joined us on the Discord, please do so, because it really helps the channel. I've got a few more videos coming up. The markets are really down, of course, the last couple of days, but I wouldn't worry too much about it. I'll be honest with you, everything you see in basically in the last few weeks, whatever, it's yes, because of interest rates, because of everything was happening, because of the treasury yield now is almost, I think, 5%, whatever. People are prefer that guaranteed money instead of putting money into the stock market, whatever. But then again, you have a good days like today, and then you have bad days like last couple of days. So just keep buying quality businesses and don't worry about the noise, as we always said. Assalamu Alaikum. Have a wonderful day.